I understand these are the last results we're going to be chatting to you about as the CEO of Jasco, because you're moving on.
Yes, I'm moving on to see Community Investment Holdings. They are our BE partner. It's been talking with them for a long time, and the opportunity is there. I've been in Jasco for 11 years now. I've been the CEO or de facto CEO first 2 years for 7 years. And it's a new challenge, and it's something that I'm looking forward to.
Okay, so nothing out of the ordinary here. You're just moving on to different pastures. And of course, you're being replaced by Peter Silva. He's with the company. He's been on the board for a little while. He was previously the CEO of Siemens South Africa. So a worthy set of hands.
It's a worthy set of hands. If you look at his CV, you can see that the company is in good hands. I've worked with him now for 18 months, and I'm happily handing over to Peter Silva.
Because you're moving on as you finish the integration of Spescom into the Jasco group. How's that integration going? Because we came in, you chatted about it towards the end of last year. It was only finalised mid-December, so we aren't even seeing it in these numbers really. We're only going to see it in the next set of numbers, aren't we?
Yeah. Effective date was the 15th of December, so it was so close to the year end that the only impact on our numbers is really the balance sheet and then the profit that we made on the fair value in acquiring Spescom. For the rest, it is the Jasco numbers in that set of results. But if we talk about the merger, the process is going quite well, smoothly. We've moved into the building, we've merged the head offices as we said we would do. We've merged the Spescom Telecoms division with Telesciences and Maringo, and all of that's going smoothly. Other things that we've identified up to now is cost savings. There's been some very exciting opportunities between the divisions where they could now suddenly tender on a lot much larger scale.
Also cross-selling opportunities.
Cross-selling, product selling into the various divisions, and it's starting to bear fruit.
And will some of those show up in your June numbers when we see them?
The June numbers will be showing some of it, but one has to bear in mind that there's certain costs that we're going to incur in getting to these cost savings, and these are long-term or permanent cost savings from our cost base. But there's some costs, we reckon about 3.2 million, that has to go through most probably this half of the year.
Well, we mentioned those numbers right at the very top of the show. That's for the 6 months to December, and they've been distorted also by that Spescom acquisition, because I see there are a number of one-off costs that you have incurred. So acquisition costs of 4 million rand. There's the 32 million rand fair value gain on the valuation of Spescom. You've also had an impairment at M-Tec. So if you strip all of those out, how did you do from an operating level during the period?
If you strip out those non-operating items that you've mentioned, then our earnings per share is down 35%. But I think of more significance is to compare our earnings to the immediate preceding 6 months, the 6 months up to the end of June.
Okay, and that was the height of the recession, or just coming out of the recession?
That was when we really saw the telecommunications industry really starting to struggle with postponements in contracts. But then our decrease was only 1%. And if you do the same calculation on a headline earnings per share basis, then we were up 6% on the previous 6 months, and I think 28% down on the comparative period in 2009.
So are you seeing things turning around now? Are some of those postponements coming back onto your books at this stage?
We've definitely seen the turnaround. We've seen a turnaround in the telecommunications division. Specifically, in the last 6 months, we've made more than 12 million profit in that division compared to a small loss in the 6 months to June. So we've seen the turnaround there. Our domestic products division has really done well. They've increased revenues and profits by 20%, also because of the Snapper product range that we've bought, the plug range, well-known plug range.
Little crocodile.
The little crocodile, the Snapper crocodile, and the Snapper crocodile is alive in South Africa now.
Mm-hmm. Electrical, your share of after-tax income from M-Tec down 34%. So that's a little bit disappointing.
That is disappointing, and that is also the reason why we have done a further impairment in the M-Tec valuation. The impairment was done on the basis that we took a more conservative and prudent look at the recovery of this business. We know that this business, at the height of the economy in 2007 and 2008, contributed or made 100 million pre-tax profits. And we are confident that this business is a good business, but we need to make sure that the new management team that was put into M-Tec delivers and produces what we believe that company is worth.
We're almost out of time. Prospects for the second 6 months of the year?
Continuing recovery? We're looking on the recovery, especially domestic and telecommunications side. We're cautiously optimistic about the security side and the electrical side. And then Spescom's contribution, especially the cost savings, should come through in 2012 financial year.